Good evening. Today is Friday, March 19th. S&P 500 futures traded on both sides of 3,900 today and also closed around that level after the last minute 15-point sell-off. The news weren't really good today for the market, as FBI is investigating if Cuomo aides deliberately reported false nursing home deaths. On top of this, the China meeting was a disaster, and market perhaps didn't like that Biden tripped on the stairs of the Air Force One today. But I think I'm just gonna blame the wind. Just like the White House speaker said, the reason Biden tripped was because it was pretty windy outside. It's very windy. I almost felt coming up the steps myself. He's doing 100%, said the spokesman. Oil was up 2.3% after being down 8% yesterday, so it recovered a little bit. Bitcoin is trading around 58, rather stable. Banks sold off around 1% today as the news were that Fed declined to extend pandemic era exemptions that lowered their capital requirements. Before they relaxed the supplementary leverage ratio and allowed them to exclude treasury deposits from their reserve requirements. So, Victor, do you think that's going to affect anything, or it doesn't really matter? And also, is it time to buy the bonds?
Well, I don't make predictions, but it was very unusual for them to increase the reserve requirements. One has to wonder why they did it. I believe that when something is announced and it becomes very likely, the market takes an immediate move to encapsulate what the announcement was. And the major announcement in the last 2 days has been that the president is talking about a tax increase. He's very specific about what it's going to be. Corporate taxes raised to 28%, and there'll be tax preferences that will make it even higher. And there'll be a millionaire's tax when your income is above $400,000. I think that's why the market was down yesterday and today. And it certainly, the market was headed for an up open today. And then as soon as they announced the change in reserve requirements, that banks will have to take account of their capital, the required capital based on their holdings of treasury bonds, whereas before they could hold as much as they wanted without it affecting. I'm wondering why they announced it. They announced that there was going to be an expiration of the reserve requirements as of March 31st. It's all consistent with their idea of cementing a tax increase. The presidential odds didn't change based upon Biden's stumble there. It's still the chances that Kamala Harris will be the next president are 25% versus 15% for Biden. Still about 60 to 70% that she'll be the next president compared to Biden. Democrats are about 56% likely to have one of their own in the presidency next year versus 45% for the Republicans. President Trump is running even with Nikki Haley, and DeSantis is about 21% for him versus 11% each for the other two. It didn't look like his stumble had much to do with anything. And put it all together, we had a 0.2%, 0.2% drop in the stock market. It's up 4.5% from the beginning of the year. Gold is down about 8 or 9%. Crude is up from 30%. NAS is down slightly for the year. We've now had two down days after a 20-day high. We're right by the round number at a 15-point drop in the last 10 minutes. That's good. What was surprising was the Nikkei was down 700, about 2.5%. The maximum was down 1,100 points, which is one of the largest declines. So that's where we are. Dr. Fauci made a monkey of himself again. I don't know why people don't realize that everything he says is designed to increase the government control of the individual, and that there's no cost-benefit analysis. One extra death is probably worth $1 billion of decline in the economy to him. And Rand Paul presented statistics, and Dr. Fauci had a bunch of excuses. We discussed yesterday how gullible I was, and how a certain person had a tremendous door opener to me, and I mentioned that it reminded me of Gilbert's first conversation with Sullivan.
After a polite introduction, Gilbert launched a volley
Louder.
of words at the bemused Sullivan.
Louder.
I'm very pleased to meet you, Mr. Sullivan, because you will be able to settle a question which has just arisen between Mr. Clay and myself. My contention is that when a musician, the master of many instruments, has a musical theme to express, he can express it as perfectly upon the simple tetrachord of Mercury, in which there are, as we all know, no diatonic intervals whatever, as upon the more elaborate disdiapason with the familiar four tetrachords and the redundant note, which I need not remind you, embraces in its simple consonants all the single, double, and inverted chords. Later, in 1893, Gilbert, in an interview, said, Sullivan reflected for a moment and asked me to oblige him by repeating the question. I did so, and he replied that it was a very nice point, and he would like to think it over before giving a definite reply. That took place about 20 years ago, and I believe he is still engaged in hammering it up.
That individual told me that he had developed a file of convertible preferred stocks on the American Stock Exchange and had done all sorts of calculations. And that was, again, that was 25 years ago. I still haven't seen the file or any calculation. So.
Well, people like that story, and they wanted to know in the comments if was he any good as a trader? How long did he work for you?
I'd say about a year or two. He gravitated to buying the dips in NASDAQ. So whenever there was a big dip, he'd buy it. And this was 1999. And it didn't work so well in the year 2000, and started losing money, and the strategy didn't appear that good to him. It's still not very good when started by a small decline in NASDAQ and a big decline. He was a very good chess player, and his wife at that time was a boxer, a professional boxer, and he was very creative, and I'm glad I was able to start a chain that led to Tim Ferriss and Josh Waitzkin and Roy Niederhofer and Adam Robinson all happened because he came that day. But
Did your brother have a good experience with him?
well, my brother was interviewed and was mainly talking about his idea as to where crypto was going. At that time, I think crypto was about 8,000, and Roy pointed out that if it serves the same purpose as gold, if you took the supply and the demand into account, it could go to about $1 million. And a lot of people bought the cryptos based upon Roy's sagacious reasoning. And a few of our listeners responded that they bought it at that time, and they thanked me. So I think it was very good because, like Andy Aiken, of course, Roy was, I think, interviewed about 2 years ago. Andy, when we interviewed him, Bitcoin was 20,000. Now it's 60,000. In 3 months, it's gone up. It's tripled. It's certainly a new world with gold down 10% and crypto up 200%.
Right. And all this NFT craze still continues. I'm not sure if you've seen, but recently, a couple of days ago, contemporary artist Krista Kim sold an NFT minted digital house for over $500,000. And so she thinks that we all will be living in an augmented reality lifestyle within a very short period. We're going to decorate our environments and our personal space, our fashion, just like tattoos, but all in a digital space with digital assets and digital decorative pieces and collectibles, fashions, and accessories. I don't know.
Well,
I myself prefer to decorate my actual house, not the digital one, and $500,000 for a digital house, you could probably buy 5 real ones.
well, let's not decry the innovations that are coming along. They're obviously
Not every innovation that comes along is beneficial, legit, or good for society, or even legit. It's
well. The acid test is whether consumers find it beneficial and whether they're willing to pay for it, and they engage in mutually beneficial exchanges. And generally the public is pretty smart, and they're careful with their money, and it may not suit our taste, but suits someone else's. I don't like to denigrate what people pay for various objects, and certainly we could have denigrated paying $5 for Bitcoin 5 or 6 years ago. My brother gave a tip to a restaurant manager, one of the best restaurants in the world. In fact, it's rated the best in New York, and it was very beneficial. He gave him 5 Bitcoins, and at that time it was worth about $40. Now worth $300,000. So it's been very beneficial, because whenever I come into that restaurant, they treat me very, very well, because I'm Roy's brother. Anyway, just because something doesn't suit us, that doesn't mean that the price that someone else is paying is too high or too low.
Well, there's got to be some limit at which it's reasonable for me to say that something is completely irrational and stupid. Some man just sold his fart for $85. I mean, is that at least fair game to say that that's stupid? It's NFT, $85 worth digital fart.
Okay, well, we each have our own views on that.
Well,
Greg,
let's get
Greg,
back to the markets then. You were saying the other day that you
Right.
look at 1 minute charts. Did I understand that?
I look at them in the nighttime just to see where things are. But that reminds me, I saw a lesson that was advertised on YouTube as to how to day trade in the E-minis.
Mm-hmm.
And the lessons were sure to bankrupt anyone who did it. The teacher was suggesting that you should only buy or sell E-minis if you were going to take a 1-point profit out of it. And in individual stocks, should only day trade it if there was if you were thinking of taking 10 cents of profit in it. And he suggested using moving averages to compare a 20 bar moving average with the current prices. And it's amazing how wrong people are in their understanding of the market, and their refusal to take VIG into account. The VIG, when you're trying to take a buck out of the E-minis, has to be over 50%. Bid ask, the commissions, say nothing. They had a nice volume today. There's only a 50-point range. Of the market got to 39.20, 3 on the high, 38.75, only 50 points, but they made up for it with all the swings, and they left people probably very frightened over the weekend. I'm not frightened. I'm very bullish. There are a lot of things that are very good. Germany's at a very at the high relative to the U.S. A lot of things quantitatively are very bullish. I didn't like the fact that NAS was up and S&P was down today, but had to come back a little bit, and there's almost a 10% divergence in favor of stocks. I don't have anything else. I'm completely bereft. Everybody's talking about catastrophes that are going to occur unless there's some tax increase and government spending. That's woke, and it looks like the chances of Cuomo resigning are very, very small. That's woke, and let's have a woke day on Monday and nice rise in the market. As for bonds, we've had quite a number of red days.
Right.
Something like 5 out of the last 10 days have been red days. I think eventually, with all the talk about the Fed quantitative easing and buying bonds directly, the bonds are basically unchanged in the last 2 days. They're only down 2 or 3 ticks today, just enough to scare everybody. Okay, that's it for me.
And just a quick question about bonds. One of the questions was, does breakout from long-term bearish trend line have any statistical significance, like we just had on 10 years, US 10 recently?
In other words, when rates go up and they break through a moving average,
Right. Well,
does that mean that we'll have further? No, it's completely untested. It's completely mumbo jumbo. It's complete technical analysis. And the only sense of something like that is a lot of people look at things like the 200-day moving average in stocks and bonds, and then the first day at the current price that the moving average starts decreasing, or some people, or when the current price breaks through, there are a lot of palookas and mumbo jumboists who follow the breakout. So if you wait a day or two and then go the opposite, it generally is very bullish. I mean, generally a very profitable strategy. Certainly that way in stocks. Whenever there's a 10% decline, if you bought stocks, be a very wealthy man. Okay, I've shot my wad.
Thank you.
Thank you, Elena.